coaster year continues on Wall Street. The markets just opened. Let's take a look at the numbers. Up 3 points. All right, it's a bit positive. Yesterday, however, the Dow Jones plummeted 565 points before regaining some of those losses to end the day down, though, still in the red, 249 points. So, here to help us make sense of what sparked the sell-off is Dr. Michael Osher, chairman of business and professor of economics at Keiser University. Thank you so much for coming in.
Thank you, Stephanie, for having me.
So yesterday, when I saw the numbers start to fall rapidly, I got a little nervous, a little panicky. Should I be concerned? Should everybody who's watching, what's happening? What's going on Wall Street?
Well, there's no doubt that there's been a precipitous drop in the last 3 to 4 weeks. Not an expected drop, actually, of the severity that it was. Nevertheless, we've got some things that are happening in the marketplace that are clearly uncertain. And uncertainty, as you know, and everyone knows, is not a good thing for the markets.
No, absolutely not. Now, we keep hearing the two causes, oil prices as well as the Chinese economy, and their overnight markets dropped again. Is that the only two driving factors causing chaos on Wall Street?
Well, there's a bit more than that, but certainly the Chinese piece is an important piece. The Chinese growth is slowing, but it's still the best in the world. So we have to give them credit for what they're doing, for sure. They're trying to do some new things with their economy, and they're struggling through a piece of it.
Okay.
And oil's a different case entirely. I don't think you can find any economists lined up or any business people lined up who would have thought that oil would be trading at $26 a barrel.
We just reported earlier that literally oil for a gallon is equivalent to a half gallon of milk right now. That's how low prices are. So, you know, we go to the gas station, we fill up, we're seeing low gas prices. We're thinking, hey, this is fantastic. Gas is cheap again. Never thought we would see the dollar mark. But is that really a sign of a good economy?
Well, it's a sign of some extra money in the consumer's pocketbook, but that extra money is not necessarily going to consume new things.
Okay.
A lot of our middle class, of course, have got prices that are on the rise. Prices are on the rise for healthcare. Prices are on the rise for groceries. So this $500 approximately that's being saved by our consumers in gas in the course of a year, they have a place for that already. It's not going into brand new consumption.
So that's not a good thing then, I'm assuming?
Well, let's just say it's not a great thing, but it's something. It's absolutely something. The market itself is a picture of what people are thinking about not only at this particular moment in time, but also in the near future. And in the near future, people are confused. And this confusion is the type of uncertainty that financial analysts can't measure. Financial analysts love to measure things, even uncertainty. At this particular time, they can't. But on the other side of it, we have an economy that's fairly healthy. And I wouldn't think that this is a time for 401k investors to panic.
That's what I was going to ask. You talked about short-term, long-term. Obviously, you can't really predict the future, and of course, nobody can really predict Wall Street. But if you had to give your best prediction, where do you think Wall Street's headed?
Well, I think Wall Street is at a bit of a precipice. They're at a technical point where if prices fall much below where they are in terms of the Dow, I think we're not sure where we're going to go. But this is a support point, and I think in the next week or two, we'll have a pretty good idea of where we're going for the near term.
All right, so don't panic just yet.
Don't panic just yet.
Doctor, thank you so much for being here. We really appreciate your time.
Pleasure to be here. Thank you, Stephanie.
Aaron will